I think the global macro situation was a key point of discussion on our panel, and there was some discussion around how development finance institutions can mitigate the impact of the current situation. There was discussion around domestic capital, investing into domestic funds, as well as a discussion on the exit environment and what that means for continental private equity more generally. Regions are quite, well, let me put it this way, from an infrastructure perspective, we're quite selective about where we invest. So it's not really a region-specific investment milieu for us. It's driven more by sectors and whether those sectors are attractive in region. So from a sectoral perspective, we sort of invest across key themes. And the global macro themes that we're investing against at the moment is digital infrastructure. We believe that the fact that data is growing at, data needs growing at 40% per annum on the continent means that there's a big investment opportunity that's brought on by the advent of cloud, Internet of Things, etc. And that's why we're looking at potential investments in data centers, in fiber to the home, fiber to the office, fiber to the tower across the continent. Also looking at masts, cell phone masts, as well as 5G masts as well from an infra perspective. Energy transition, also a key sector, and we're seeing this sector develop on the continent and move towards a more commercial and industrial orientation as governments are under pressure, as well as local utilities, and we see companies coming to the fore in terms of purchasing their own power requirements. And then urbanization, and we believe that connecting rural areas to more urban centers is important, as well as having the sort of logistics infrastructure that's required for communities that are more urbanized, which is why we're investing in the cold chain and in more sort of port and logistics plays around the continent. Well, I think kind of domestic capital into domestic funds is a key one. I think the more we can attract domestic funds into investments also is a good harbinger of attracting international capital into local funds, international private capital rather than DFIs. I think the growing trend of large exits on the continent, which we've seen in our infrastructure space through recent renewables transactions, mean that there's a track record of large exits on the continent, which we'd like to be a part of, both as an exiting party and potentially as a purchaser as well. And well, I think just generally the development of the continent and the fact that there's these tailwinds of growth. I think the energy transition presents a wonderful opportunity to participate in the energizing of the continent. There's some big needs, and we think that the private equity sector is quite well placed to play a leading role in meeting those requirements. I think more generally it's having more players in the market. It's having a lot more domestic capital in the market, a lot more international capital in the markets. I think it's also good to see investors with more boots on the ground, or rather kind of entities such as ourselves with boots on the ground on the continent, driving local solutions for the various investments we make. And more generally, hopefully better returns all around so that it's easier for the sector as a whole to raise more international capital. Very excited to be here. We've been strong supporters of the conference over the years, and it's been a place where we've been able to network with existing and potential investors, and yeah, we'll continue supporting it going forward.